Hi everyone, today we are going to discuss HDFC Bank's Q2 earnings performance. HDFC Bank, which is the largest private sector bank in the country, reported yet another quarter of strong performance with net profit increasing by 21% on a year-on-year basis, backed by robust loan book growth. HDFC Bank has been the most consistent performer on the street, delivering earnings growth of high teens for many years. The predictability of its number at times makes it almost boring to analyze. Its loan growth continues to be strong, much ahead of the system, margins are always stable, and its asset quality is as pristine as ever. Despite this, let us look at some of the key highlights of Q2 performance. So to start with the key highlights, bank's margin continues to be best in class in the industry. HDFC Bank's net interest margin improved to 4.3% in Q2 despite cost of funds increasing on a year-on-year as well as on a quarterly basis. This was mainly because loan book got repriced on an upward basis. Also, the capital raising in the quarter helped to a certain extent in improvement in margins. The second aspect of the P&L worth talking is the improvement in operating efficiency. The cost to income ratio of the bank improved to 40% as compared to 42% last year. This was mainly led due to controlled branch expansion and digital initiatives. Apart from these two P&L factors, the most important factor worth highlighting and talking about is the robust loan book growth of bank. The bank's loan book increased to almost 7,50,000 crore, which is a 24% increase as compared to last year. Within total advances, both retail as well as wholesale, that is corporate lending, increased by 24 and 25% respectively. Now, this performance of the bank is commendable as it continues to grow the loan book at double that of the system's average. The bank's liability franchise also continues to be superior with the CASA ratio, that is current and savings account ratio, at around 42%. Deposit growth was at 21%, just below the advances growth. However, the growth in the time deposit was very encouraging at 23% YOY. No wonder bank is flushed with liquidity and is exploring buying out the portfolios of NBFCs which are struggling to maintain liquidity in the current environment. Bank's asset quality continues to be impeccable with gross NPA and net NPA at around 1.3 and 0.4% respectively. The provision coverage ratio is also very comfortable at 70%, and if we have to include the floating provisions, it is much above 115%, which is very good. Talking about the outlook for the stock, in the current environment where large part of the banking system has been rendered weak due to asset quality woes and also due to lack of capital, we expect HDFC Bank to continue to strengthen its market position by gaining the market share from public sector banks on the corporate lending side. We expect it to maintain the leadership position on the retail side. We also expect the bank to churn profitable growth in the coming years as it continues to enjoy dual modes both on asset as well as the liability side. As such, the bank has outperformed the broader market, that is Nifty, year to date. The stock is up 5% while Nifty is down 2%. Despite the outperformance, the valuation of the bank is reasonable. It is currently trading at 3 times FY20 book, which is compelling compared as it is below its historical average. We have used some of the part valuation to arrive at the fair value for HDFC Bank, which clearly indicates a significant upside as compared to the current market price. Its two main key subsidiaries, that is HDB Financial Services as well as HDFC Securities, are gaining scale and are contributing around 5% to its valuation. It is a rarity to find a quality business with predictable earnings growth at a reasonable valuation. The current consolidation in the stock price is mainly due to the broader market correction and also due to uncertainty relating to impending change of CEO in FY20. However, we expect management transition to be very smooth for HDFC Bank. Hence, investors should utilize this opportunity to buy into the stock. With markets staring at multiple headwinds, HDFC Bank is a must-buy core holding for Indian investors.